Hello, everyone. Thanks for joining us. We're going to hold off on getting started for just another minute or two, let the latecomers join us, and then we'll get going. We're so excited to have you here, though, for our Intro to House Hacking class. We have a passion for helping people build wealth through real estate, and we believe heavily in this method of doing so. So we'll be here in just a moment to get started.
By the way, my name is Nash Middleman. I'm Joe's colleague and the lead buyer's agent of the Joe Dickerson Group. If anybody has any burning questions that they would like answered, we love engagement in these webinars, so we're not talking for an hour. But if you guys have any questions, feel free to drop them in the chat box, and we can absolutely address those as we go through the presentation.
Well, I don't want to keep everyone waiting too long, so I guess now is as good a time as any to get started. We are recording this as well, so if there's any stragglers, we can always send them the recording. As Nash said, please do share your comments, questions, whatever you have in that chat box so we can be sure to address them. I'm Joe Dickerson at the Joe Dickerson Group with Keller Williams Realty. We're a real estate team. We help people buy and sell houses. And we have a passion for helping people build wealth through real estate. And Nash introduced himself, but since there's a new person or two on, he can do it again.
Yep, my name is Nash Middleman. I work with Joe as his lead buyer's agent at the Joe Dickerson Group. Happy that everybody is here. And if you have any questions, feel free to drop them in the chat box and we will make sure to address them.
And just to make sure you're in the right spot, we're talking about house hacking today, how to build wealth through real estate without needing a ton of money and without knowing how to fix any toilets. Not to say that you won't want to fix toilets in order to keep some costs down, but we'll get to all that in just a little bit. So, are you ready to put your money to work for you through investing in real estate? And are you ready to overcome your fears of getting started? And are you ready to build true wealth and create a legacy for your family? Scream "I" or type it into the chat box. I know we are.
I am.
Thank you, Nash. So, have you wanted to invest in real estate, didn't know where to start? Have you gotten your funds together, but got scared of the process or the risks? Or have you been curious about whether house hacking is the best fit for your goals? You might be one of those people. We're going to address all those and more throughout this class. And again, if there's any particular concerns, send them in the chat box so we can be sure to spend some extra time with them. So the point of today's class, we're going to talk about how to create wealth through real estate without any previous investing experience, without needing hundreds of thousands of dollars, and without needing to fix a single toilet. So if that's what you're looking to do, you are in the right place. And you're probably somewhere on this spectrum. This is you. You've either never invested in real estate before, or you have, but you're here to learn more. And if you're not on this, and it's okay to be anywhere on this little line graph we put together, this class is still for you. If you don't fit on this line graph, let's talk and see where you do fit.
So our goals for today are to discover whether house hacking is the right fit for your wealth building and home ownership goals, and help you understand and achieve a better idea of how house hacking works in real world scenarios.
And if you walk away with those things, we did our job today. And we're gonna achieve those goals through three things. I'm gonna start by telling my story and how I got to where I am. We're gonna discuss the 5 myths around getting started in house hacking and what might be holding you back and how we can overcome those. And then we're gonna talk about the 3 keys that we find to be the keys to success, to successfully house hacking and starting that journey towards building wealth through real estate. So let's get started. We're going to get started with my story. So here are my wife and I and in our very first house hack. We got started in 2008. It was an interesting economic time. It suited us, though, to purchase our first property. We started our house search like a lot of people do, like a lot of our clients do. in that we didn't know what we were looking for. We had a budget and we couldn't buy what we wanted with that budget. And we ended up looking at a lot of these condos that had been converted from older buildings and with really high HOA fees, and it just really wasn't doing it for us. So we had a realtor at the time, it was before I started helping people buy and sell, suggested that we consider looking at one of these guys. The picture on the right, it's a duplex. It has, duplex is 2 units. It has a 3-bed, 1.5 bathroom unit on the upper floors, 2 floors, and then a 1-bedroom, 1 bath in the basement unit. And our real estate agent at the time told us that if we played our cards right, we could get this thing to be cash flow positive whenever we moved out. And we had never heard those words together, but it sounded wonderful. So we ultimately went for it. In this case, we purchased this property. It had a monthly payment of around $3,300 a month, and we rented the lower unit for $1,500 a month, meaning our cost to live in a 3-bed, 1.5 bath was about $1,800 all in, all expenses included. And that was nearly half of what the market rent for a similar unit would have been. So it was great. And fast forward a number of years, we've house hacked now 4 times. We're in our 4th house hack now. We've gone on since to invest out of state, as well as passively through real estate syndications, which I'm happy to answer questions about later on if there's time and if there's interest. Oh, great question. What city was my initial house hack in? Yes, it was Washington, D.C. So I came from the East Coast. Obviously, we're in a different market. Both the market in D.C. is different than here, and it was a different time. A lot has happened since 2008. So yes, our first 2 house hacks actually were in DC. Our latter 2 were in Oakland here in California. And then we've gone on to invest out of states in Alabama and hold real estate now in, I don't know, half a dozen states through fractional ownership. So here we are now. We have little bits and pieces of all these buildings and properties, and we attribute all this to house hacking, to starting out, getting in the market, building wealth through house hacking. It allowed us to save our money so that we could invest, in our future, and it allowed us to build wealth through appreciation and equity building, which we'll talk about in more detail in a little bit. I forget why I had a cute picture of us, but there we are. There's my family. So I've got this slide in here because I mentioned that we've done passive real estate investing through syndications. I just wanted to go kind of give you a glimpse, high level, of all the different types of real estate investing that you can choose to do. Obviously, we're here to talk about house hacking, and we absolutely will focus a majority of our time on that. And yet, I think it's important to understand where things fall on the spectrum of active versus passive. Active being the type of real estate that you are both physically and mentally and financially invested in. So you're spending time potentially every day working on the property itself, or dealing with leases, or managing the assets in some regard. So house hacking does fall on the active side of the spectrum, which means you do work, and you typically get better returns for it. And then we've got a handful of others just to give you an idea of where they fall based on the type of, based on the effort that's involved. So flips, very active. Syndications, that's the passive side of things, very inactive. You write a check, you get money. That's pretty much the end of that. All right, but we're going to move on to the 5 myths that may be keeping you from getting started house hacking.
Yeah, and our goal is to, again, help you build wealth through real estate. And just so everybody on the webinar knows, we offer so much more than just multifamily home buying. Whether it's your first house, second house, we can introduce you to the right people to do syndications and REITs. Getting an understanding of how house hacking works and if it's the right fit for your goals is one of the goals for today. So without further ado, the myths. the first myth. You need hundreds of thousands of dollars to get started in real estate. This can be true, and the Bay Area has an extremely high barrier of entry to get into the market. And on top of that, it's extremely competitive in some areas. If your goal is to buy a multi-million-dollar property in San Francisco, then you're probably going to need $100,000 to get started. Yet, to get your foot in the door and start off by making an initial investment, the Federal Housing Administration offers loans with as little as 3.5% down. And on an $800,000 property, that's about $28,000 plus closing costs. Also, right now we're seeing a much less competitive market than we've seen in the last, ever since I've been in real estate, really in the last 2 months. There's properties out there that are sitting for a lot longer than normal, and properties that in the past might have received multiple offers aren't getting as many offers come offer days. And less buyers means less competition, and that's leaving the door open for buyers with much less than 20% down to get in a contract. Myth number 2, you don't have enough time to invest in real estate or purchase your house hack. This can be true. Real estate is extremely complex and difficult transaction, and there's so many options and things to consider, from agents to loan products to property types, neighborhoods, and the market as a whole. Again, it's a lot to consider, and it can be overwhelming when you're trying to weigh all the factors that goes into making sure you're making the right investment for you and your family. But this is where building and leveraging a team who can take the time to understand what your goals are and can help you recognize an opportunity that is a good fit for those goals is super important. Joe and I, we're built careers around helping people build wealth through real estate, and we're in the trenches every day living and breathing this stuff. And we can really help filter out a lot of the noise and make sure that not only are you successful, but you're successful in a time frame that works for you with the least amount of obstacles. And I have a feeling that after the shelter in place, there's going to be a lot of good deals coming up. You just have to stay ready, because the good deals go quick. Number 3, you need to be handy and know how to fix toilets. Being handy certainly helps when owning multifamily properties, as it is more of an active way of owning real estate. You have to do things. Fixing toilets is an extreme example, and I'm not sugarcoating that, yet it, again, can help. If you're not handy or a big fan of making repairs, we also have a huge network of preferred vendors that can help you fix toilets or make roof repairs or paint or even manage tenants if you want to take a back seat and have a more passive approach to owning a multifamily property like a real estate investment.
Yeah, and I like that we talk about toilets. You saw in the pictures of my wife and I working on our property. While you don't have to fix toilets, there is a lot of upside there. That sweat equity going into the property can really go a long way to build your long-term wealth. So while it's not a requirement, and it's certainly not for everyone, it is an option to help you ultimately build wealth moving forward.
Myth number 4, now is not the right time to buy given the market. Does anybody on the webinar agree with that? There's a lot of economic uncertainty going around right now. This is a valid fear, especially with recession looming. What if you buy a home and the value drops? Or maybe you're waiting for the market to crash because you want to buy low and get the appreciation. I'd love to hear some of the feedback or other reasons why people think that it's not a good time to buy. Feel free to drop them in the chat. Or not. But, the truth is that nobody can predict what's going to happen in the future or how the ripple effect is going to affect the real estate market, because we've never been in a position like this. There are some economic downturns that we can draw from in the past, yet we've never been in a pandemic situation. And just a fun fact, out of the last 4 recessions, The only one that home prices were actually impacted was the 2008 crash that was caused by the housing market.
Right. In the four recessions prior to that, housing prices actually appreciated through the recession. So real estate is a very recession-resistant asset to hold.
A recession-proof asset. And what we do know is we're seeing a much less competitive market than we've seen in the last 4 years, and interest rates are historically low, which actually makes it a really good time to be in the market. On top of that, I've spoken to a lot of agents, and there's a lot of pent-up inventory out there where April and May are supposed to be the busy season in real estate, and I have a feeling we're going to see a surge of inventory coming on after the shelter-in-place gets lifted, which again is going to make for a much less competitive market. Myth number 5, investing in real estate is risky. I can't talk today. Investing in real estate is risky. Sometimes it is. There are some downfalls and pitfalls that you need to be conscious of. And the safest investments are always the ones that you best understand. So by doing your due diligence and going into an investment with your eyes open can really help minimize the risk. And this is all about doing your due diligence, learning the neighborhood to see if there's any new developments in the neighborhood that could increase or decrease the value of the property, reading the inspection reports, like the general home inspection, the structural pest inspection, roof inspection, and getting an understanding of the condition of the property so you don't end up buying a money pit that's going to cost you a ton of money to make livable. Understanding the point of sale ordinances and the whole picture when buying a house, because there are some hidden costs like city and county transfer taxes, escrow fees, and those are things that are really going to help give you a clear idea of whether or not it's a good investment or not, and help you be successful in reaching your real estate goals.
And on top of that, we have local ordinances such as rent control and just cause eviction ordinances to consider as well. And what could happen down the road with the potential removal of landlord rights, which will impact your assets' value and potentially your cash flow. So yes, understanding and forecasting, well, that picture is very challenging. We're in a time where the pendulum is swinging towards tenants' rights. So I would go in with the assumption that, especially in jurisdictions like Oakland and Berkeley and San Francisco, that you can expect even more tenants' rights and therefore fewer landlord rights moving forward. And that unknown does add some real risk. But as Nash mentioned, your best investments are always going to be ones that you understand and in markets that you understand. So if you've lived here all your life and you don't have, you're thinking about out-of-state investing, for example, you probably want to become an expert in that market before you jump in. All right. So we covered the 5 myths. Again, if there are any other myths, or well, they may not be myths yet. If there are any other concerns that you guys have, please feel free to send them in the chat, or if there's anything you want further detail on in regards to those 5 myths, please let us know so we can answer them. In the meantime, we shall move on to the 3 keys to maximizing your success. And that starts with knowing your numbers and really understanding the costs and underwriting before you go in and purchase a property. So we'll see if I can get a spreadsheet up real quick. How about there? There it is. Okay. So we put together a investment analyzer specific for house hacking, and I know this probably appears pretty small on your screen, so I'll try to zoom in a little bit, and we'll just chat real quickly over parts of it. That looks better. So this is basically a rundown of how much is it going to cost me, what are my monthly expenditures, what's my income projected to be, and therefore what is my ultimate cash flow. Because we're talking about house hacking, living in one unit and renting out the rest, especially in the Bay Area, your cash flow is likely to be negative, and that's okay because it includes your housing expense. So if you're renting now for $2,000 a month or whatever it is, if you house hack and keep your payments, your cash flow at $2,000 a month negative, that's essentially the same, and you're building wealth at the same time and taking advantage of all the benefits of real estate that we'll get into in just a minute. So at a real high level, I do want to say this will be our gift to you if you make it to the end of our webinar and make at least one comment in the chat box. We'll get you the spreadsheet so that you can edit and do whatever you want with it so that you can analyze properties in the future. So on the left side, I've got all the purchase stuff. We've got a purchase price. Obviously, that's pretty important. I do want to call out that the green boxes are the ones that we'll be focusing on changing. The white boxes and the one yellow box are all automatically calculated. So we've got a price. Yep.
Real quick, this is an off-market property that we have coming up. It is a 3-bedroom, 1-bathroom in the first unit, and then a cottage in the back that is currently being rented for $2,000. So it's a duplex where, again, if you recall Joe's story, to buy a 3-bedroom, 1-bathroom house in Oakland and have a monthly payment of $3,700 is if you think it's a good deal, put it in the chat box. But I think it's a killer deal. So anyway.
Yep. So yeah, at a high level, what we're looking at here is we've got all our purchase stuff on the left side, and you see loan information down here and down payment. So in this particular scenario, we're talking about 20% down. So you'll see that $200,000. FHA that Nash mentioned earlier is always an option. There are challenges that we can get into with maximum purchase prices and that sort of thing. So for this particular property, it may not work out. Though we're happy to show more examples for anyone that's curious about that low down payment option. The middle columns are income. So in this case, we've got a $2,000 income from the rear units. And then you can see total income. Okay, it's only 2 units, and we're going to live in one. And then on the right column, we've got all the summary of expenses. So all the white ones are calculated for you. And I'll show you how to make sure you're getting the right things inputted there. And then down here, we've got other monthly expenses such as potential repairs. Can't forget about those, as well as utilities. And I do separate monthly shared utilities versus owner-occupied utilities. And I can explain why when we talk about taxes. And then down further on, you've got the tax rates and whatnot. You'll see that taxes in much of California, and especially the East Bay, are really high. So we're at about 1.35% plus an additional $1,200 or so dollars. This does vary drastically by property. So if you want specific numbers, let us know and we'll help you dig them up. But that's your annual tax bill, which is a lot. And then insurance premiums, that's a safe number to use for I would say modest in our area priced houses. Under $1 million, $2,000 a year should be fine. And then in some cities, you're going to have a business fee as well. So let us know where you're looking, and we can help connect you with what the business fees look like in that jurisdiction. And then you also decide if you're going to manage it or not. This is a house hack that we're theoretically living in, so we're going to say that there's no management expense. So in this case, Nash, what's the summary here?
So $3,700 to live in a $1 million, $1,050,000 property, I think is a pretty good breakdown of an investment. On top of that, you get all the tax benefits of owning a real estate property, which we'll get into in a second, and you're capitalizing on appreciation. And we've seen about 5% appreciation year after year, and 5% appreciation on property at this value is close to $50,000 a year, a little over. So all in all, I think it's a solid. I think it's a solid buy. at that purchase price.
Yeah, okay. And this is in the Bushrod area of Oakland, so it's 62nd Street. Makes a big difference in Oakland. Okay, we have a question. Would this cash flow in this part of Oakland if you were to move out a year later? In other words, what would the 3-1 rent at? So this is in Bushrod. I would estimate the 3-1's probably going to be in the between $3,000 and $4,000. So on the conservative side, I'd probably do like a $3,400. It's a kind of a tighter floor plan. $3,400 income for that 3-1. Though it would also not surprise me for it to rent closer to or just over $4,000. And that's all a matter of, do you want to immediately occupy or have someone immediately occupy the property and start getting that rent income, or can you hold out and make sure you're finding someone that's going to pay top dollar? Yeah. Great question.
Also, the 2-bedroom, 1-bath in the back is being rented at below market rate. So there's upside in that when they do decide to move out, you can rent that out at the market rate, which is probably closer to $3,000 for a 2-bed, 1-bath. So that's where you see a lot of taking advantage of the cash flow.
Yeah. All right. So that's our spreadsheet. Again, that will be a gift to, well, at least some of you. Anyone who chats in the chat box gets our gift. All right, let's hop back over to our presentation here and continue on with those 3 keys to success. And again, if there are questions about specifics, we're happy to answer them. Key number 2, understand the risk and recognize the opportunity. So that goes back to investing in real estate can be risky. And that is true if you don't understand the risks that are out there. So we'll go through some of the things that we recognize as risks versus reward. And again, if you want more details, just holler. Risk number 1 that I'm going to mention, rent control. So in Oakland, Berkeley, San Francisco, now Richmond, and a lot of the other jurisdictions around the Bay Area are implementing rent control on some level. And this is going to impact your ability to raise rents past a certain benchmark. State of California also has rent control, though it's not nearly as restrictive as our local jurisdictions. So generally, it's going to be tied to the Consumer Price Index, which will tie your rent increases to, well, lately, somewhere around 3%. And that's just is what it is. Unfortunately, there are no longer exemptions for house hackers. There used to be the ability that if you lived in a 2 or 3 unit building, the rest of the building was exempt from rent control. In Oakland in particular, that is no longer the case. Tied to that, there is a just cause eviction ordinance. So if you are living in the property and you have a troubled tenant, you cannot evict them without just cause. Just cause is typically related to non-payment of rent and violating certain lease terms, that sort of thing. So that is important stuff to know. Vacancy is risk number 2 that I'm concerned about, especially in our current markets in coronavirus world. Now, we are in a housing crisis, and if you live around here, I'm sure you're aware. We are very short on housing, meaning that if a rental is properly priced, it's going to go fast. But yet there is still the potential for vacancies, long-lasting vacancies that you won't be earning income for. The most common one happens whenever a tenant moves out of a property and you have to do some quick cleanup or work or whatever, and you may go a month or potentially 2 without that rental income. All right, maintenance and other problems. So this one we most often get ahead of by thoroughly inspecting a property before purchasing it. So that means doing home inspections, pest inspections, roof inspections, and depending on what's going on with the property, it might also involve other inspections like foundation or soil tests, that sort of thing. And that helps keep us ahead of potential problems in the future, or at least know what they may be in the future. These inspectors are going to advise to the age and condition of all the systems in the house, hot water heaters, pipe systems, electrical, whatever, to give you some sense of when those things are going to need to be maintained or replaced. So a common one that we see around here is water heaters, because they don't last forever, and they corrode, especially if the building is still on older water supply lines. So we're able to understand when that cost may have to happen and how much it's going to be by doing these inspections. Nash, do you have any other problems to add?
You mentioned difficult tenants.
Yeah, I did.
No.
Okay. So recession is obviously another risk, and it's a very real one in our current world that we're living in. And yet, as we talked earlier, real estate is one of the best investments to weather a recession. And as far as house hacking goes, I think this kind of goes a step further because you're living in it too. So it has that dual purpose of it's an asset that is providing you income, and it's serving your housing needs. So the great thing here is with the right investments, should you be unfortunate and lose your job, that rental unit that unit that you're living in can be rented to cover the cost of the mortgage and keep you from having to foreclose. So it reduces the risk in that way. And also, people always need housing. So even in a down market and in a recession, there are still people that, need to live in a house. So again, we believe that real estate's a great recession-proof investment. People often ask me, like, where I look, what neighborhoods, what cities, whatever, do I look in to have the best recession-proofing possible? And so I'll answer that really briefly with transit-oriented housing is my go-to personally. So I want to be close-ish to a BART or a rapid transit station because those are going to be the housing stock that's always going to be in demand.
Real quick. So, Robert, are you on the call by any chance? We had a question about first-time homebuyers in the city of Oakland, and another way that house hacking is a great investment is by buying a primary residence. You get to take advantage of the interest rate of buying a primary residence versus an investment property, which can down the line really you can take advantage of that. I don't know. I thought I saw Robert on.
Yeah,
I'm here.
So real quick, introduce Robert. Robert Ring is with Cross Country Mortgage. He's one of our go-to lenders, especially for house hacking, because he really takes the time to understand the numbers. They are different than a typical lending situation when you're talking about house hacking. So Robert, take it away.
Cool, thanks for the intro. So what was the question, Nash, that you wanted me to answer specifically?
Yeah, are there any recommendations for first-time homebuyer programs in the city of Oakland or California?
There are first-time homebuyer programs, but a lot of them, I think all of them I know of, are limited to single-family dwellings, condos, single-family homes, townhomes, etc. So if you're going to buy a duplex or 3 or 4 units, you need to go for a different loan program. I would say the lowest barrier of entry and the easiest one to get is an FHA loan for a 2-unit home. You can do it with 3.5% down. And that can all be a gift from a relative. If you don't have that, you can pull some from a retirement account in certain situations. But as far as down payment assistance for multi-unit homes, I don't know of any.
Yeah, and FHA, I'll point this out, is not a first-time homebuyer program. It is available to everyone.
Thank you. That's correct.
Yeah, and back to my point, like the rates on a primary residence, like an FHA program, are much better than that of if you were to buy a multifamily as an investment property. And that's where if you can lock in at a historically low interest rate, your property is going to have an edge over all the investors out there as well.
Cool. I agree. That's a great point.
Yeah, so on the reward side, so we're going to recognize briefly the opportunity of real estate. And the first is my favorite, cash flow. So that's money in your pocket every single month. Or in the case of house hacking, reducing the money going out of your pocket every single month. And again, with house hacking, at some point this house may not be suitable for your home anymore. And just like we did, you could potentially move to a new house hack or your new permanent home, and you have this asset that you can fully rent out and produce rental income and cash flow that way. Next is equity. Essentially, the value of your house minus what you owe on it. That is going to go up over time as long as you are paying your mortgage. Every single month, part of the monthly mortgage payment is going to pay down the principal balance of the loan, which ultimately increases your net worth, even if the value of the home doesn't change. That's what's cool about equity building. And tax benefits, I guess that would be my second favorite of these rewards. There's a lot of them for house hackers especially. Homeowners themselves, for a home that you live in, you do have some tax advantages. You can write off part of your mortgage interest. You can deduct some of your property tax payments, and you may be able to sell the property at a profit and not pay capital gains tax on it. All great things. For rental properties, including for rental properties that you live in a portion of, there are some additional tax benefits. My favorite of which is depreciation. Essentially, the government allows you to write off the value of the entire structure the entire structure that is being used as an investment over 27 and a half years. And in our market, this adds up to $10 to $20, potentially $30,000 of deductions every single year, which is pretty cool. And after you move out and rent out the whole thing, that depreciation goes up even more. Additionally, you can write off all your maintenance costs as well as a portion of your utilities that are paid for the entire property. Again, the line here is the portion in which is occupied by you. Those write-offs don't apply. You can't write off depreciation, you can't write off utilities. But for the portion that is being rented, you can. And so I just divide, find whatever percent that I live in and whatever percent is rented out and use that percent to apply to all my expenses. We often get a bunch of questions about taxes, so feel free to shoot them in that chat box and we'll get to them. But moving on to our fourth reward of purchasing real estate, and that's appreciation. We live in a highly appreciating area. California has always been known to be an appreciating market, and there's no sign of that stopping, even with what's happening with the coronavirus. And essentially what that means is you can expect or hope for, I don't know if I would say count on, significant appreciation each and every year. In our area, it often averages around 5% annualized appreciation. And that means for that $1 million property we looked at, as Nash mentioned, $50,000 in wealth building in just 1 year. And that brings me to to our last reward, and that's leverage. Leverage is the ability to use someone else's money to purchase an asset. And the best case for leverage being an amazing reward is what I just mentioned about appreciation. So $1 million property doesn't require $1 million out of your pocket. So let's use the example in the spreadsheet that we looked at. You put $200,000 down, the asset appreciates 5%, and you still get the whole benefits of the $50,000 in net worth increase, meaning you just turned your $200,000 investment into one that's worth $250,000 of actual wealth. So pretty cool stuff.
That one's my favorite of the rewards.
The leverage, yeah.
Leverage. Yeah. So yeah, the last of the three keys is build a team. And we would love to be that team. We have a passion for helping people build wealth through real estate, and we take our passion very seriously. We take the time to understand what your goals are and what's important to you, and it's our mission to make sure that our clients are successful. And from there, we can utilize our network of vendors and professionals to make sure that you receive the best service and are successful in the least amount of time. So here you kind of see, like, this is just at a very high level what real estate transactions might look like, where and all the parties involved, where you have contractors, lenders, insurance companies, appraisers, and we are happy to set you up for success and introduce you to our network, again, to make sure that you're successful.
Awesome. So we now covered the three keys that we believe are imperative for your success in building wealth through real estate and getting into your first house hack. So we discussed my story, along with the 5 myths that we most often come across, as well as, again, the 3 keys to success. So I love to tell a story of our past clients, Abby and Ben, because they did what's hopefully you're here to learn about. They house hacked and they built tremendous wealth in a fairly short amount of time. So Abby and Ben, just like when I got started, they were looking they didn't really know, single family house, condo, they're not sure. They needed more space for their kids, their 2 kids. So we started chatting about their house search, and they were getting priced out of what they thought they wanted eventually, which was a single family house. So we talked about this house hacking idea, and ultimately they got into a duplex in the Diamond District of Oakland at a purchase price of just over $800,000. They were able to move into the upper unit of this duplex and continue receiving rental income from the downstairs. I believe the long-term tenant down there was paying about $1,800. They purchased this property with an FHA loan, so only 3.5% down, so that's somewhere around $30,000 with closing costs, and at a great interest rates, and yet with the FHA program, because it's such a low down payment, your housing expenses do tend to be a little bit higher. So while it was affordable and they got into the house, what happened next was the most exciting part. So they did some repairs and some cosmetic upgrades to the unit that they were living in, including finishing out the attic that was already kind of bare bones but ready to go. And last fall, they got their house reappraised at over $1.1 million, meaning they created $300,000 in worth in a matter of, I want to say it was like 8 months or so of home ownership. And through that refi process, they were able to drop $1,000 off of their monthly mortgage payments. So now their cash out of pocket is in the $3,000 range to live in a house that is absolutely perfect for them. So I love that story. Not only are they great people that I'm really excited for, but it's also a clear example of the power of this strategy. So, did you learn at least one new thing? I hope so. Chat us in the box. Let us know what your one big aha, your big takeaway is, please. Or if you were reminded, that's okay too. And while everyone's doing that, you've got 2 choices. You can do nothing. You can keep doing what you're doing, whatever that is, potentially renting, maybe you own a home already, staying there, and that's fine. Or you can choose to invest in yourself and your future and get started. So Nash is going to talk about what it looks like to get started.
Yeah, so getting started, first thing you have to do is identify what your goals are and figure out if house hacking is a good fit for those goals and wealth building goals. if it's house hacking, it's not all sunshine and rainbows. There can be pitfalls and drawbacks, and it can be challenging at times. Yet it is an extremely powerful strategy as a way to build wealth through real estate. And also, you get to take advantage of all the benefits of owning real estate, and even more tax benefits than if you were to just own a single family.
Yeah. And I do want to say, I know you're here, which means you have some interest in house hacking. But as Nash said, it's not for everyone, and it's okay should you choose this not being the method to build wealth through real estate. As we talked about at the beginning, there are lots of methods to build wealth through real estate, and we're happy to chat about what those could be for you that meet your goals.
Number 2, engage a lender. And so you know what you can afford and identify a plan to arrange financing. We know a good lender. Robert, if you want to say anything in regards to that. But taking the time to vet a lender will help you get clarity around what a comfortable monthly payment is. And Robert can also help tailor a product that's going to work best for you.
Yeah, absolutely. So the process to get started is really simple. With us, we just have you fill out a simple questionnaire, and we look at a few of your documents. And then we're going to craft a mortgage coach total cost analysis. It's just the name of a software that we use. It's really easy to read. It has charts and graphs. And this will show you your payment information and help you narrow down what to look for when you go to meet with Nash and Joe. Because ultimately, the thing that you're going to remember at the end of every day or end of every month is how much you're paying. Right, and so that's we can kind of reverse calculate, what your home price should be, and if you're looking at a duplex, how much you need in rents on the other unit, et cetera. So I'll help you narrow down all the numbers on that end for affordability and for pre-qualification, and then that'll arm you really well for when you go to work with Joe and Nash and finding the right property and narrowing it down to a really specific set.
Yeah, and again, it's really important to get a clear picture of what the total cost is per month to owning a property. And also staying ready with a loan, because there are going to be some good deals that come up and they're going to go quick. And taking the time to understand what the total cost is beforehand and find a lender that's going to work best for you is better than finding a deal and then scrambling to find a loan and potentially using a product that isn't going to be the best fit or is going to cost you more money in the long run.
That's correct. I agree.
And number 3, third step to getting started is you have to drink coffee. And pre-shelter in place, pre-COVID-19, the Joe Dickerson Group, or we are coffee, what's the word I'm looking for?
Fanatics.
Fanatics, yeah. Coffee connoisseurs, if you will. And we would love to help strategize with you and figure out if house hacking is a great fit for your real estate goals and set you up for success in reaching your real estate goals, whatever they may be.
So nowadays, without coffee shops, though that may change soon, I understand, we've been doing these via Zoom. So get on a one-on-one call and really do a deep dive into what makes sense for considering your goals and your financial situation. Thanks. All right, so it's time for any questions. Chat them into that box and we'll address them. Again, if you've chatted and we can find your email address from your registration, we will send you a copy of that investment analyzer along with a video walkthrough, a more thorough video walkthrough of how to utilize it for yourself. Completely available for you to tinker with as much as you please. And until some questions come in, I do want to thank you all for coming and investing in yourself and your future wealth building. We're the Joe Dickerson Group. Again, I'm Joe, and Nash co-hosted. We have a passion for helping people build wealth through real estate, and we hope we're able to help you do the same. All right, do you focus on East Bay only, or have you looked at the South Bay as well? Yeah, so our team is growing, and we do have coverage now over the entire Bay Area. I will admit that I am not a South Bay expert, but we do have a new team member that lives down that way and understands the market down there. and can absolutely help across the entire Bay. Thank you for that question.
Yeah, for anyone else on the webinar still, I'm curious what drew you to our webinar, and where are you currently with the home buying process? But don't all jump at once.
All right, so we'll hang out here for a few minutes in case some questions roll in. Again, thanks for coming. And if there's nothing else, have a wonderful day and try to stay sane and positive in these times that we live in.
Bye, everybody.
All right, thanks, Robert.
Thank you, Robert. Oh yeah, and if anyone wants to unmute and actually ask a question, that's totally cool too.
Yeah.
Alrighty, if there's nothing, we'll get out of here.
All right, well, thanks again for coming, and feel free to reach out if anybody has any follow-up questions or anything else. The door is always open.
All right, thanks.
Great.
Good day.